Cryptos crash after risk assets puke to new lows on Fed tightening. Vol explodes as stablecoin Terra gets put to the test, and the Luna Foundation has to dump all their BTC collateral to defend the peg. Key technical support at 29K is the next level to watch, which if broken will cause fireworks across the whole crypto space. All this and more in this week's Crypto Insight. Okay, so crypto this week. So we've been flagging for quite some time now that we thought the break was going to come to the downside, right? We thought this thing was going to resolve to the downside, that there was just too many headwinds for crypto, given what's going on with liquidity, risk assets, the strong correlation there, what was going on in like retail stocks, things like that. There was just, and even technicals, right? The technicals just kind of looked like the move was incomplete. And so we were probably going to have a downside break. So we finally got that. Obviously, it was kind of helped with general sort of risk asset weakness over the weekend. But obviously, there was a crypto specific driver that helped accelerate the move, right? So the first kind of level of support where you would have expected it to kind of calm down was around that 33, 34K area, okay, which was kind of marking this wick here. Now we accelerated through it, and that was because of this Terra peg, right? That was being tested, which got tested at the weekend, which seemed to hold. And Terra is basically the stable coin that goes with Luna, and that was the Luna Foundation Guard had been accumulating Bitcoin in an attempt to say they're going to hold that in their treasury, and then they're going to use that as collateral to stabilize the stable coin if they need to. And that collateral was basically tested, right? So the idea is the value of that collateral started to drop as Bitcoin dropped. Someone supplied a hell of a lot of Terra onto the market and took that peg from, it's supposed to be fixed at $1, took that down into the 90s, and then it really just kind of broke and went absolutely haywire, right? So that we saw levels that went down to 0.06 handle, right? But that's basically what a peg break looks like, right? So you had nothing at $1, and then boom, you suddenly kind of reminiscent of what happened in the Swiss currency back in, can't even remember which year it was now, probably sort of 13, 14, I believe. But yeah, that's what a peg break looks like, right? And we literally just saw one in crypto. Okay, so ultimately what happened there? Well, Luna had to basically liquidate their Bitcoin. So they had about $1.5 billion of Bitcoin. They might have had a bit more by now. And they basically had to dump that in an attempt to stabilize this stable coin, right? And they've managed to get it back into the 90s, okay? But what happens from here remains to be seen, right? I don't know what kind of firepower they've got to defend this peg, and it's not trading at $1 anymore, right? So, people have been parking money in these stable coins to earn nice, healthy yields of 20%, 15, 20%, whatever they were on offer. And now you're finding out why those yields are there in the first place, right? And whereas in actual dollars, you can get 1% basically. So, that's the risk with these things. If you're going to put your money into these things with super high yields, they come with risk, right? And we definitely saw that in real time yesterday. Yeah. Now some people say it was a coordinated attack on it. I'm not really privy to that, but it is what it is. It's a stress test of that system, and Luna is down about 55% on the back of this move, basically, right? So it probably doesn't bode that well for this ecosystem, basically. And then lastly, on the Bitcoin move, so have we reached the ultimate targeted downside? For me, if that was an ABC correction up to 48K, the next impulse move down is in progress. If we're comparing that to the first move down, which was from the all-time high of 69 down to 32, then you kind of, these things have kind of got to line up a little bit more in terms of size. So we could well see the resolution of this impulse leg much lower, right? We could just be in the middle of it right now. Basically, this could be the third wave within this impulse down. That would kind of be my, looking at the charts, that would kind of be on my base case, and the fact that I'm bearish S&P and risk assets. This thing's not going to escape that, right? It's probably got some more downside. So, you know, whilst 29K has been a very, very strong level of support for a long time, I suspect that it's not going to hold this summer, and 29K probably breaks. If it does break, you know, there's speculation about 21K being the stress point for MicroStrategy, another guy who's holding a shitload of Bitcoin on their treasury and has done it with leverage. So if MicroStrategy's level, let's call it 21K margin call level, if that gets put to the test, then God knows how low this thing's going to go before this move's done, right? But you know, I think the thing, if you're trading crypto, you just have to you have to have the mindset that anything's possible. And for me, there's no reason why 15,000 isn't possible, basically, right? I'm not ruling it out. So for me, I'm pretty well hedged right now in my crypto. You know, I'm not doing anything with it. I'm not monetizing those hedges. I'm just trying to kind of not get killed by this move down, basically, right? So that's the idea. I'm a long-term believer in the space. I do think it recovers over time, but you can't escape the risk asset correlation right now. And when there's some glaringly large stops out there in the market, similar to, you know, something, you know, that happened in XIV in the vol space, for those of you who know about these VIX ETNs that blew up in 2018, right? It's basically like when there's a big stop order out there that the whole planet knows about, usually that stop gets tested, right? And for me, MicroStrategy is looking like a well-flagged stop somewhere around that 20K area. I would be surprised if it's not tested, okay? And we'll see if he's got the firepower to defend it, right? So that's kind of what I'm thinking on Bitcoin. If we then move over to ETH, that's obviously got dragged down as well, but it's bouncing quite strongly today, kind of stronger than Bitcoin. So it kind of touched around that 2,200 area. It's a pretty violent sell-off, given that it was a few days ago that it was at 2,900, sorry. And then it hit 2,200 in a matter of days, bouncing violently. If we look at the cross rate, it's actually doing really well. It's almost challenging those highs that it made early April. So on a relative basis, ETH trading much, much stronger than Bitcoin, and it didn't have this kind of liquidation that was going on with Luna to worry about as well, right? So, you know, despite the crypto carnage, ETH Bitcoin cross doing pretty well. And that's kind of being mirrored in the option space, where we're seeing a lot of kind of cool buys and stuff in Ethereum on a relative basis. Other alts also got hit. You know, AVAX, Solana getting whacked as well, more than Ethereum, more than Bitcoin, and obviously, like I said, Luna's down 55%. That's my quick crypto roundup of what's been happening in terms of price action. I'm going to hand it over to Aaron now. He's going to run you through the on-chain metrics and stuff, and then I'll do the vol stuff at the end. Yeah.
So this week for on-chain, basically we're going to do things a little differently. I'm going to do some Glassnode like Imran usually does, and then I'm also going to feature some stuff from Will Clement, who's kind of a popular on-chain analyst. So starting out here, we're going to start at the top left. You have that chart with the red drawdown shadowing, and basically it's showing that in previous bear markets, when we had these big drawdowns, we saw it get down to 77, 83, 85% before we really started to kind of turn back around and start to head back up. And before yesterday's kind of big downtick, when we were hovering around 33, we were still only at 49.5%. And so if we look back to, let's see, July 21, where that was the last time we were at this 30K mark, even then we were at 54%. So really the question is, you know, has the market matured to a point where we don't need these massive drawdowns that we saw in previous bear markets? Or is that what we need to look forward to in order to kind of work our way back up? From there, that kind of takes us right to the next chart on the top right, which you can see this is going over Bitcoin's overall network profitability, which Glassnode defines as the addresses, entities, and supply that are in profit. And basically what it's showing is that those entities, you know, 60% of them, we've dropped to 60%, are still in profit, which obviously on the other side of that means 40% of this addresses, entities, and supply are suffering unrealized gains. And it is a notable point because this is the point in previous bear markets where we had to get there before we saw our final capitulation. So again, just showing that even despite this kind of recent pain, we may need a little bit more before we can get going again, kind of, talking back to what Imran was just saying, where we might have some further downside before we could kind of see us kick back up. On the bottom left, this colorful chart here, this is basically just charting distribution and accumulation. So on the right, you have this kind of gradient. In the deep red, you have just pure selling. Deep blue, you have pure buying. And what this is showing is in the end, this shaded red area, you can see that, the top, the whales, people who have over 10,000 Bitcoins, they've just been all selling, all distribution. And then at the bottom, where you usually have the people you can count on the most to be accumulating, people who don't have a Bitcoin yet, they have these dark blues. Even they have kind of lightened up on the accumulating and buying. Some days looking at, no buying at all. So again, it's just kind of showing there is some softness and some selling going on. And then the last kind of chart here on the right is talking about the mempool. I know Imran had a nice little briefer yesterday on what the mempool was. And basically it's when there are transactions submitted to the Bitcoin blockchain, right? A miner has to select those transactions to include in their block. And that way they can try and solve their math problem, earn the reward. So while those transactions are being waited to be picked, they go into this pool, the mempool, and kind of historically over the last year or so, the mempool has been very light. There hasn't been a lot of transactions, different reasons, hodl, right? People are buying it to hold it. And then you also have the exchanges, they've been pooling their transactions. So there's been less transactions in the mempool, but in this flush down, we got to all-time high numbers, all-time high in terms of since Glassnode started charting it, and just kind of showing some urgency, maybe some flushing, some de-risking going on, which did in line with some of the highest transactions amount. Let's see, roughly 3 Bitcoin were spent on those transactions. Again, that can relate to some urgency as people might be less familiar in Bitcoin, but if you've used things like MetaMask or maybe a Phantom wallet, when you submit a transaction, they let you put how much you want to pay for that transaction to go through. And so it's the same thing in Bitcoin. It's just when you operate in exchanges, you don't see it. They kind of hide that user interface, but basically people were willing to pay more for their transactions to get them submitted to the blockchain so they can convert out of Bitcoin into fiat. And so moving on from there, we're going to go on to some of the Will Clement focused stuff. Again, he works for a company called Blockware, very popular crypto on-chain analyst. He has a good big Twitter following. He's usually worth a follow, mainly because he's at a point with his relationship with Glassnode that they let him kind of create his own charts. So he usually has some slightly different views and ideas than what you'll get directly from Glassnode. And so the things that stuck out to me from him is relates to these first 2 charts here. It has to do with the correlation, right? And so on the left, this oscillator is a correlation from Bitcoin to the NASDAQ. And you could see we've been floating around right around a perfect correlation, Bitcoin kind of moving right in lockstep with the NASDAQ. That's also what the second chart is showing here. Again, really just showing that there's been points where it's almost looked tick for tick. Bitcoin is just getting treated as a risk asset, whether you believe that or not. Long term, that's kind of besides the fact that is how it's being treated right now. And then so in this bottom left, this is actually showing another correlation, but it's correlated to the dollar, the DXY. And again, it's showing a similar behavior that you might get from other commodities where dollar strength tends to mean commodity weakness. The thing that you're buying the commodity with is getting stronger. So again, showing some weakness. And then this last chart here, which was particularly interesting to me, this is showing your long-term holder supply. So you have this pink line showing a number of people who've held their Bitcoin for over a year, and it's just been slowly ticking up, even despite this kind of selling. While at the same time, this blue is showing their cost basis, right? On a whole, what did this group pay for their Bitcoin? And so while that long-term holder supply has been grinding up, that cost basis has flushed down, basically meaning some people who kind of bought at the higher end are probably selling to try and, they want their dollars, they're lowering their cost basis. But even with that, like I said, we're still grinding up. And to me, it just kind of points back to some of the earlier points where we still haven't reached the full selling that we're probably going to see in this market. There's still a large cohort out there that has coins to sell, and kind of combined with some of the other charts in the previous page, just pointing out that on-chain seems to show that it has been bloody, it has been painful lately, but we probably have a little bit more pain and a little bit more deleveraging and de-risking before we can move on and start making new highs and going up from here. And that's it for the on-chain.
Cheers, Aaron. Cool. So now I'll do the vol stuff, but hopefully that was a nice break from my voice. Okay, so realized vol, you know, we've had months and months of low realized vol in crypto. Steadily implied vol's been drifting. Finally, we get some excitement, right? Which I'm sure you're all really happy about. General sort of risk asset weakness, like we said, started it all off. The peg kind of triggered the craziness, and then all hell breaks loose. So now that their treasury's gone, we'll see if that volatility dissipates. But you know, you had a decent move up over the last few days from realized around 50-55 to around 75. That's what that big move has basically managed to do. Now the implieds went even worse, right? They went from around 55 all the way up to 90-95. So a massive spike there, driven by obviously some put buying as people kind of shat themselves. But basically you can see didn't take long once Bitcoin's price stabilized above 30K, didn't take long for those implies to get hit. So this is the 1 week implied, got as high as 95, and then they slammed it back to around 80, basically, much more in line with the realized, basically. So it doesn't take long for that vol to mean revert. If we look at the volatility cone, you can see that now on a 1 day, 7 day, and 14-day basis, we've got above median short-term realized vol, which like we haven't seen in a very long time. We've been hugging kind of the lows for ages, but finally we see a bit of a pop there. But like I said, you know, to go back towards median, you know, would take that vol down, you know, a good 10 or 20 points pretty quickly, right? And you know, I think that's probably the path of least resistance in terms of the vol, unless we really start to see an acceleration. If we were to see an acceleration below 29K, then the market might start to get more nervous. More long-term holders might throw in the towel, because that's been a support level for a very long time. So, you know, that's going to be on long-term holders' radar. But until that happens, I'd expect vols to kind of start to retrace again. And we've got our usual DOV option selling coming on Friday. The fact that we've dropped about 10% has taken us to some of these strikes that the DOVs have sold. So dealers are actually sitting on strikes that are at the money now, whereas normally they're long the out of the money strikes. They don't have too much decay on them. The fact that we sold off and we're now sitting on those strikes, you know, you might actually have a case where they then need to go and dump some vol over the next day or two because their theta bill's too heavy, basically, right? So keep an eye out on that if spot prices don't move too much. Okay, so that's realized vol. If we then move over to term structure, shouldn't be a surprise to anyone who's been following vol for a while that curves have all gone backwardated. So we had a flip from contango to backwardation on that big move yesterday. And the front end, you can see spiked by about 30 points, right? So really steep flip, but it's all that very short dated stuff. Anything like 1 week expiry and shorter, that's the stuff that really caught the bid, right? You can see the rest of it, whilst it is bid, I mean, if you go to the long end, it's barely up, right? The long end's up a few vol points on Bitcoin. And if you look at the long end of Ethereum, it's actually small down, which is quite surprising, I would say. But just goes to show there's no real demand for that Vega on a big move in spot, basically, right? It's the gamma that people want when that happens. Okay, so that's kind of there in terms of term structure. Like I say, I would expect that front end to revert back, given how much it's come up and the fact that people are probably sitting on long strikes now. So I would expect that to, you know, mean revert fairly quickly. And you can see with the charts on the right, you know, that actually shows you each individual expiry and what it's done. We did see a move up in all expiries, but you know, compared to the highs that it got to, it's given back a lot of it already, basically, right? So, you know, give that a day or two of stability, and that'll be straight back to where it was, I suspect. Yeah. Okay, so that's term structure. What has Skew been telling us? Skew's been interesting. Obviously, it's been for puts lately. It's been for puts for quite some time, as people have been, you know, using that cheaper vol and that downside as a macro hedge, given the correlation that it's got to equities. If we zoom out a bit and you look at where Skew is in the broader context, we go back to kind of early last year. So that's kind of where Skew has been. So you can see you got the zero line sort of here. You're obviously firmly below the zero line, but in the pink line, which is the 1 week Skew, you kind of reach levels that are consistent with, you know, previous capitulations, right? Which is about 15 vol points for puts over. So that often does signal, okay, things have gone a bit too far. People are just like, you know, paying too much for the puts. And and you do get a bounce, right? So we've seen, you know, we've seen a 2,000 point bounce off the lows. Puts got to 15 vol premium, and that's kind of signaled that short-term low. Is that an ultimate low? Hard to tell, but let's bear in mind that in the summer of last year, when we got that massive outflow, you got as low as 35 to 40 vols for puts over, right? So there's still quite a lot of room for this stuff to get more stressed than it currently is. So I wouldn't rule out the idea that on a break of 29K with a fast acceleration to 20K into that MicroStrategy area, don't be surprised to see put skew trade up to 30 again, because it has been there before, basically, right? So I don't think we're out of the woods. Yeah, we might get a short-term bounce, but there's quite a lot of resistances overhead. There's quite a lot of macro headwinds, and there's quite a lot of fragility building to the downside, in my opinion. Yeah, so, you know, if that skew did revert back towards, you know, sub 8, 7 or 8 again, it's probably opportunities to get long it again, basically. You know, I think, to play that ultimate downside break. Now, it's hard to buy 1 week skew though, because, you know, if you don't get your timing right, it's all just going to decay away to nothing anyway. So I'd probably park myself in shorter date, in something slightly longer dated, sorry, like 1 month if I was bearish. But that's something I'm going to keep on the radar, because I do think that break's pretty possible. Yeah, particularly if you know, we get into that MicroStrategy territory. And then the last thing to cover is option flows. You know, obviously we had the usual sort of gamma flows on the back of DOV selling, but then also people scrambling to cover gamma and buy gamma. So that's all the stuff centered around the middle pocket that I haven't really circled. The kind of flows that the main flows that we saw were some big puts got bought last week before the acceleration down. Obviously, as the macro is deteriorating and post FOMC, we did see 35K puts getting bought in decent size in June and September. I haven't circled those, but those are basically these red and yellow bars there. That was the 35 strike. Then also, as we broke down yesterday, and with the whole Terra thing, we saw more put buying in lower strikes, so in the 15K, 20K area, stuff like that in June and July. That's the stuff that I've circled there. So people kind of buying lower delta crash puts. And then we also saw some call selling as well, call buying, sorry, in September. So the bullish flows are longer dated. They tend to be September, December, and maybe even March next year. In Bitcoin, we saw that in September expiry. And we also saw some profit taking once the Terra stuff stabilized on some of these 35K puts. And then if you look at Ethereum, not so much in terms of just outright crash protection buying, I wouldn't say. A bit of a mix, a lot of gamma activity going on. That's why everything out to May expiry, the blue, the pink, and the white is kind of all of those bars there that haven't really circled. That's just general kind of short dated options flows and kind of hedging against some of those DOVs. But, you know, the notable flow for me is this long dated call flow still remains, right? So you've got September calls, you've got December calls, March calls, and call spreads. That's what that activity is there, basically, right? There's still a definite belief that the upside you want to own is in Ethereum rather than in Bitcoin, and the kind of timing on that seems to be, you know, December, March next year, maybe even September if you want to get some leverage to it because it's a bit cheaper in terms of premium. That seems to be what people are going after, basically, right? And then there was a little bit of vol selling going on in the short dates in Ethereum as well before things really got spicy. So obviously those guys probably got hurt a little bit on the moves, but now that things are stabilizing, we'll see how that plays out and how quickly that vol mean reverts. But the spread between Bitcoin and Ethereum short dated vol has got pretty close to zero, but longer dates still have a premium for Ethereum, basically. Yeah, and that's my summary on crypto for this week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials or you can visit our website, options-insight.com. Thanks a lot.